All right, let's talk about the crypto company BMNR, because what's happening with this stock is, well, it's fascinating. We're not just looking at a simple price chart. No. What we're actually seeing is a massive battle between two totally different stories, two competing timelines, playing out right now. And, figuring out this conflict, that's the key to the whole thing.
So the first timeline, the one you're probably hearing about everywhere, it all kicks off with fear. I mean, the whole crypto market has just been hammered, right? Bitcoin dropped below a super important psychological level, Ethereum broke down, and when that happens, it's pretty much guaranteed to set off a wave of forced selling. People having to liquidate to cover their losses, and that panic, it's bleeding right over into stocks like BMNR.
And this right here, this is the core contradiction, laid out perfectly. On one hand, you've got the general market completely freaking out, thinking it's crypto winter, and just panic selling everything. But then, on the other hand, you have the big institutional players, what people call the smart money, and they're doing the exact opposite. For them, this whole dip is just temporary noise. It's a buying opportunity.
Which of course leads us to the big question for this whole explainer. What in the world is driving them? What do they know that gives them the confidence to be buying hand over fist while everyone else is running for the exits?
Well, the answer is all in that second timeline, the long-term story that these institutions are placing their bets on. It's this vision of the future that's built around a huge $500 million secret. So let's peel back the layers on this.
Everything, and I mean everything, starts with this one number. The entire foundation for the bull case is the company's absolutely staggering core asset. BMNR is sitting on 3.63 million Ethereum tokens. That's the whole treasure chest right there.
Okay, so how do they actually plan on unlocking the value of that treasure? Well, that's what this is all about. They're launching something called the Melvin Validator Network. Think of it as this massive infrastructure project designed to put all that ETH to work, just generating a constant stream of passive income from staking rewards. It's basically like earning a massive amount of interest on the crypto they already own.
And this is the most crucial part to get. It's a fundamental shift in their entire business model. They're moving away from being a crypto miner, a business that's super expensive to run with really volatile, tight margins, and they're transforming into a fintech yield giant, a company that just cranks out predictable recurring revenue with hardly any operational cost, all from assets they already have in the bank.
And here it is. This is the number that's at the very heart of why those institutions are so convinced. The projection is that once this Melvin network is up and running, it's going to generate an incredible $500 million in passive recurring revenue. We're talking annually. A revenue stream of that size, it just completely changes the entire valuation of the company.
But, and this is super important to remember, this $500 million number isn't a sure thing. It's not a guarantee. It all hinges on two really big ifs. First, the Melvin network has to launch successfully and get fully up to speed. And second, the price of Ethereum needs to not just recover but climb all the way to a target of $7,000.
Okay, so now let's connect that big long-term vision to something that could have a huge impact right now, like this week. We're talking about a potential short squeeze. And this whole thing revolves around something called a dividend trap. It's a really interesting tactical play where short sellers can get, well, trapped. See, because they borrowed the shares to sell them short, they're suddenly on the hook for paying the company's dividend. This creates immense pressure on them to buy back the shares before a deadline to get out of that payment.
Let me just walk you through how it works. So, a short seller borrows and sells BMNR shares. Easy enough. Then, boom, the company declares a dividend. All of a sudden, that short seller owes a cash payment they absolutely did not see coming. Their only way out of it? They have to buy back the shares before the deadline. And that, right there, can create a huge surge of forced buying.
And here's the kicker. Here's why this is so urgent. The deadline is this week. When the market closes on Thursday, that's it. It's the last chance for regular investors to buy shares and still get the dividend. But even more importantly, it's the final chance for the shorts to cover their positions and get out of the trap.
So, okay, with this complete pressure cooker situation building up, how are traders actually planning to handle this week? Well, the source material lays out a surprisingly specific battle plan, especially for Monday morning.
And rule number one, the most important rule of all, is patience. The idea is do not chase that very first green candle right at the open. You've got to give it, say, 10 minutes. Let all that initial emotional, low liquidity nonsense wash out. The whole plan is about waiting for real confirmation, not just jumping on the first little flicker of movement. So here are the two clear strategies right from the source. First up, the defensive plan. The idea here is to wait for the price to drop down to that $30 floor. Now, if it hits 30 and then bounces hard with a lot of volume, that's your signal. It means the big institutions are stepping in to defend that price. Then there's the aggressive plan. For this one, you're looking for the price to get back above 33.12 and hold it. If it does that, it's a sign that the bulls have soaked up all the selling pressure. And what's interesting is, both of these plans are looking at the same initial targets, $34 and then $35.20.
All right, so let's tie this all together. What we really have here is a classic showdown, right? It's two completely different stories, two separate timelines, and they are both playing out in this one single stock.
And this really sums up the whole conflict perfectly. You've got the short-term timeline, which is just driven by fear. We're talking the crypto market crash, the pressure pushing the stock down to that $30 floor, but it also has that tactical element of the dividend trap. Then you've got the long-term timeline, and that is all about conviction. It's the belief in that $500 million a year yield machine and a total transformation of the company. It's really a clash between the panic of today and the massive potential of tomorrow.
And that leaves us with the big final question, doesn't it? That $500 million bull case is huge, absolutely massive, but it's also based on things that haven't actually happened yet. So how do traders balance that future potential against the very real, very immediate pressure of this dividend trap? Which timeline is truly driving the money right now? That's the battle we're all about to watch.